On today's episode, we are going to take a look at two growth stocks that you should have on your watch list right now. The first stock we're going to take a look at is one in the educational market, mainly dealing with the nursing and military education. The second is a very cool gaming company with an awesome loyalty program to increase its overall engagement. Both these companies have great revenue growth and have a strong balance sheet. So let's get started. Before we go any further, make sure to hit the subscribe button, the thumbs up, and follow me on Twitch. I live stream and take a look at stocks you want me to take a look at. So the first company we're going to take a look at is the American Public Educational Inc. And this is a leading educational service provider that offers respective, innovative, and affordable educational programs and services. And they're pretty much broken down into two systems, I want to say. First is the American Public University system. And here you have APU, which is America Public University, and then they have AMU, which is American Military University. Then they have the Hondros College, and this is the College of Nursing. The APU is accredited by the Higher Educational Leading Commission, and some of the top 10 most popular programs are Intelligence Studies, Homeland Security, Cybersecurity, Criminal Justice, and IT. They have a mixture of both online classes and in-campus. Most of the in-campus are in the nursing side, so the Hondros, and they are getting bigger. Recently, in January 19th of 2021, Hondros College of Nursing opened a new campus in Akron, which is in Ohio. So now before we take a closer look at the company, let's just take a quick look at past performance. In the past year, the stock has returned about 25.56%. The stock ticker is APEI. This is American Public Educational Inc. And it currently has a market cap of about $465 million. If we take a look at future growth, revenue is expected to grow 28% on average for the next 3 to 5 years. The company is already profitable and they already have positive cash flow from operations. If we take a quick look at their balance sheet, they have no debt whatsoever and they have plenty of cash at hand. So pretty much their fundamentals looks pretty great. Strong future growth, strong earnings, strong cash flow from operations, and a strong balance sheet. Now, if we take a look at their most recent quarter, just to see how the things are moving, remember I mentioned they had two kind of main educationals, the APU and the nursing. So in APU, in the most recent quarter, they saw 25% year-over-year growth on new students registration, and total net course registrations was up 18%. On the Hondros, which is the nursing side, they saw 88% enrollment new student growth, and total enrollment increased by 38%. As an overall system, the overall operating margins for APEI is increasing. Right now, they're sitting at about 4.1%, where about a year ago, they were sitting at 0.4%. They've also announced an acquisition to acquire Rasmussen University, which was the largest educator of ADN nurses. So now APEI will become the #1 educator of pre-licensed nurses. So this new acquisition is going to add about 24 campuses across 7 states. So now the powerhouse, this has become the powerhouse of the nursing platform. And this is where they're seeing some crazy growth, right? We saw this quarter, they saw about 88% new enrollment growth and still over 33% on prior enrollment growth. So they did give an outlook for their fourth quarter of 2020. They are expecting strong new student enrollment and regular student enrollment in their nursing program, about 34%. They're also expecting strong growth in their APUs, which was just the military university and the public university. They're expected to see about 11% to 15% new students and about 6 to 10% net registration growth. Overall, they expect revenue to grow about 10 to 14% as well. So we can see this is still growing at some great levels. All right, so I just want to give my overall opinions before we take a look at the second stock. This one is definitely a pretty cool one to add to your watch list if you want to grow the educational portfolio or exposure in your portfolio, right? They're seeing strong revenue growth, strong cash flow, and earnings are positive, a strong balance sheets. They're still seeing strong enrollment growth in both new and old students, and it seems like they're still being pretty aggressive in acquiring more universities or campuses to increase their overall exposures, mainly in that nursing department, and I believe that's due to the huge growth rate they're seeing there. The only, I want to say one of the biggest negativity I see in this stock is just that it's a very boring company, right? Many people might not get excited for something like this, but sometimes the boring companies are the ones not many people are looking at, except when it's too late and it's done a crazy run up. All right, right, the second company we're gonna take a look at is Playstudios, and this is gonna go public via a Spac merger. Playstudios is a gaming company. They create their own games, and they have this pretty crazy loyalty program where when you play their games, you can actually get real life rewards. And I think that's actually pretty interesting. They already have some cool partnerships, but let's take a closer look at them. All right, so first let's take a quick look at the games. Then we're gonna look at their loyalty system, which I believe it's the true unique level of this company. So the games they have right now are mainly casino games. They have like My Vegas Slot, Pop Slots, a lot of casino games. They are trying to enter the RPG realm. And if they do this right, I do believe it can be a great thing for the company. Next, let's take a look at their loyalty program and how it works. They call their loyalty programs Play Awards. So the way it works is, I think it's actually pretty smart. Let's say we take a look at their casino game. So, right, they have My Vegas Slots. This is pretty much a casino game, and you get tokens or points every time you play the game, every time you're active with the game, every time you sign into the game, and if you're active every day or so, you get points. Now with these points, most people are just able to buy in-game items, but Playstudio partnerships with companies that kind of have similar style to their games. So with Vegas Slots, they, for example, partner up with casinos, with cruises, with restaurants. So instead of just using the game points to, for example, buy in-game items, you can actually use these points to buy, for example, some tokens for if you're in Vegas, for some casino near you. So it's overall pretty cool. And now with this new development of an RPG game, what they're gonna do is the type of points that they're gonna have here are maybe like esports events, sell you concerts. Instead of you being able to buy obviously in-game items, which you can still do, you can buy like a ticket to an esport games or buy tickets to a concert because of this. And so Playstudios is to become the first publicly listed mobile game company offering players real-world rewards via a Spac deal. This Spac deal gives them a value of about $1.1 billion, and they will be merging with stock ticker ACAC. This is AC's Acquisition Corp, and right now it's actually sitting at $10.92, so it's not that overextended from its nominal value. So first thing we're gonna see is loyalty programs work. We've seen it in everything from credit cards to restaurants to airlines to gas. So loyalty programs work, but there hasn't been a true loyalty program in the gaming department, in my opinion, for real world rewards. So I think the loyalty program is pretty cool because imagine if you first start playing the game. When you first start playing the game, you enjoy a lot, you start building up all these points. By the time you get bored of the game, you might have already have about 50% of the rewards needed to get a 3-day cruise or a 4-day cruise for free. So instead of you stopping already, you're most likely gonna continue to play the game. And with you continuing to play the game, it's also gonna allow ads to continue to hit you, so the company overall is still gonna grow more revenue over time. Right now, their loyalty program is just being used internally, but one thing I can see in future growth is maybe them kind of licensing this loyalty program to other gaming companies, and I think that's actually a pretty smart move for them. So right now, they already have some partners in the system. They have like Royal Caribbean, they have Norwegian Cruise Lines, they have Maverick Helicopter, they have MGM, I believe I saw them around here, Park MGM Las Vegas. They also have a pretty cool growth strategy. First, they want to optimize their overall franchise. Then they want to expand, build new games in different genres. With these different genres, they're gonna have new partners and they're gonna have a new form of customers coming in. They're also trying to do acquisitions with some small gaming companies or apps that have proven their customer base already and overall diversify their business model, focusing on ad monetization, player commerce, and loyalty as a service. And this is actually what I was talking about, of them kind of licensing this loyalty program to other gaming companies, and that's one I'm really liking. So right now, a quick example, like I mentioned here in the bingo game, it's a huge market opportunity, seeing strong year-over-year revenue growth, and the Play Awards offerings are like cruises, hotels, resorts, concerts and shows, restaurants, and regional attractions. Then once they move into this RPG category, they can offer games like amusement and theme parks, sports events, esports events, concerts and festivals, regional attraction. And again, it's gonna have these people, the players, continue to interact with the games, placing more ads, placing them to sell more stuff and purchase, be more of a customer to them. If we take a look at revenue, they are already making money. So it's not one of those SPAC companies that's not making any money right now. Revenue is close to 275 million for the end of 2020 estimates. They are expecting about 13% revenue growth. For 2021, they expect about 22% revenue growth. And for 2022, they expect about 33% revenue growth. So even at current levels, let's just say right now they're sitting at about $250 million of revenue. That was a 1.1 billion valuation. It's only a 4x price to sales ratio on current values. That's pretty cheap in my opinion. And if we take a look at adjusted EBITDA, this company is profitable. Right now they have margins of about 12%, and by 2022 they expect about 22-23% margins. All right, so now my overall thoughts on Playstudios. I do enjoy Playstudios a little bit more than the other one, but that's just because I'm more in the gaming department. Maybe someone in the education department might like Apei better, but I do like the type of games that the type of future that Playstudios can see. Strong revenue growth. Current valuation is not that crazy in my opinion, especially with the type of revenue growth they are expected to see. And the overall loyalty program, I think that's their secret gem right now that they have. And if they license this to other companies, that might be a better market than them creating the games themselves and just using it on their own games. So I do believe that's the better market, and maybe these loyalty programs can come out outside of games and go into maybe some other types of platforms as well. So I hope you guys enjoyed today's episode. Make sure to follow me on Twitch. Take care and have a good night.